Well, clearly it's not positive news, but it's not really entirely a surprise given the political climate in Italy, where the new government has been pretty critical of ECB rate policy, has been sort of quite populist in its approach. So I think from that perspective, it's not something which is entirely a surprise, but the market has taken it negatively.
It is populist in its approach. It hasn't been populist in a lot of ways that many thought. We've seen Meloni play ball when it comes to the geopolitics. I mean, we've seen us Russia-leaning when she came to power, but we haven't seen that card play. We haven't seen, in terms of extra taxes, lobbed that much either. I mean, there's been a lot of fiscal transfers from Europe to line the pockets of Treasury. So this is a surprising context.
Well, you pick the battles you can win. And I think from that perspective, they've decided that the banks are a really bit of a back of the net approach to take. You can, get some good brownie points politically for that. The profits have been supernormal relative to the relative recent past. So, over the last 15 years, compression of interest rates has been very negative for the banks. And all of a sudden, the high rate environment has been very positive for them. So in a sense, I think it's not inconsistent with what we would have expected at the time of the election, although, as you say, there hasn't been as much of that populist approach as we would have expected at that stage.
But as an investor, doesn't it seem like a setback for you when you're allocating more to the region or thinking about allocating more to the region, given that their profitability is being challenged? And also, at the end of the day, fiscal intervention into a free marketplace is always bad for business.
Yeah, I don't think you should ever be surprised when the southern European countries take that approach, because there's always a sense of there being quite a large state aspect of economic management in those kind of environments. And I think also from the perspective of the fiscal balance, I think it works for them. As investors, these banks are never going to trade far above book for a long period of time, and I think that's the reason why, because there's always political interference which is likely to occur.
Typically, we used to think about the banks as paying out fines. There was, penalties for misdemeanors. That was how the revenue was raised. This time around, it seems a bit different, and we've now had Spain and Italy join the party of windfall taxes. Is it natural to ask the question, who else lobs a windfall tax on the banks?
I think it's entirely possible, and I think that would be according to the colour of the government, whether or not the banking system in terms of capital, etc., is particularly healthy in one country or another. Where there is excess capital available, I think it's more likely. And where, of course, there is a political event, an election or whatever coming up, that's likely to make it more probable as well, I would say.
Right, but the fact that we're expecting rates to peak, and the fact that for the last 10 years banks have not really had a great run. It's really been in the last 18 months or so that they've been able to enjoy the benefits of a tightening cycle. Do you not think that this perhaps may not be the most appropriate time, because you don't know what happens down the road with delinquencies, with defaults, with NPLs, and they need to be well capitalized and well provisioned for those challenges?
They do, but the profits that have been coming through on a nominal basis have seemed very high, and I think that's what something is politically advantageous for governments to take advantage of. I would also say that you have to fix the roof while the sun is shining, and while profits are very high, if you are going to take excess profit taxes, that is the time to do it.